And we are live. How's it going, everyone? We have a special guest today from Cypher Protocol, an expiry futures market on Solana. I'm lucky enough to have Barret, a core contributor, joining me today. How's it going, man?
Hey, it's going well, Greg. How about yourself?
It's going good. It's going good. We actually just jumped off a live stream to celebrate BSC News's first birthday and kind of talk about our expansion into multi-chain. So just knocking out some streams for the day. But to get into what everyone's here for, do you maybe want to give a brief introduction on yourself, a little bit of background in your role at Cipher?
Yeah. So I'm one of the core contributors at Cypher Protocol. Kind of wear a bunch of hats from aiding with the dev team here and there to designing a lot of the protocol mechanisms to marketing and business, pretty much anything in between, right? And I have a background in math and finance. Was originally doing some research on sea ice movement in Antarctica, then moved to deriving numerical methods for asset pricing models, and then over the last handful of years have been a data scientist and engineer across a couple different startups.
Yeah, that's amazing. It definitely seems like you have some hefty experience there. I'm curious if maybe you could give a bit of a boilerplate on what the significance is of decentralized expiratory futures markets. Because I know there's some futures in crypto, some decentralized futures, but they're a little bit different than what you guys are doing. And you guys even elaborate on that model a little bit more.
Yeah, of course. So in traditional finance and in the centralized world, there are both expiring futures and perpetuals, right? And in DeFi, there has pretty much only been perpetual futures, and so we believe that expiratory futures are necessary for growing the industry at large, helping more people from the Web2 space and traditional finance into kind of crypto and blockchain in general. And also the expiring nature of these types of futures contracts allows an individual or an institution to place a more nuanced opinion on a particular asset, right? So for rates, interest rates, for example, right? You could be you believe that they're going to go up in the short term and down in the long term. You can place a calendar spread, which buying one and shorting the other at two different time frames, and that allows you to place a very nuanced opinion on the market, right? Which you can't necessarily do with just being perpetually long or perpetually short.
Yeah, definitely. It kind of opens up the doors to a lot of trading strategies that are seen in traditional finance, and that actually honestly just give more options to the user. Something that I think is really exciting that you guys are looking to do through your synthetic assets is pre-IPO and pre-IDO. Do you want to touch on the process of this, how you guys are going about it, and then maybe I'll just dig a little bit deeper once you give us the outline?
Yeah, of course. So with these pre-public markets, right, Cipher is aimed to be an ultimate price discovery mechanism, right? We want to help enable both protocols and organizations alike to understand what the market is willing to pay for their assets when it is time for them to go public, right? So the synthetic nature of the pre-public assets, right? You have minters that are locking in collateral to the system in order to create a position that can be traded on the order book itself, right? So maybe that is somebody that holds underlying shares of an organization like Stripe, for example. And they want to come and make a dirty hedge because they don't lock their shares into the protocol at all. They just would, lock in the excess amount of capital, right? Because we are over collateralized. That would then, they would pick a certain price to mint their position at. These futures products get created and then are now available to be bought on the order book, right? So we're built Serum, which we're massive fans of, especially with their new Serum Core that's coming out, which is like an asset agnostic order book, which allows protocols to do some more interesting things. But now once like a position is out there and minted, right, there's a kind of dynamic expiration of these like pre-public markets, right? Because the protocol isn't 100% positive when, like, let's say Stripe is going to IPO. So when they do their S1 filing, the market gets updated for that expiry nature, right? But everybody can, take a long or a short position prior to, the market financially settling.
Awesome. Yeah. And I think there's a lot of layers there. And obviously the most kind of impactful one is what you just noticed, or what you just noted. People are able to get exposure to these assets when they probably weren't able to. And it seems like FTX offers this, but not in a decentralized manner. And that's already had a fair bit of success. So I definitely see the demand for that. I'm curious, what makes it so innovative that this is on an actual order book and on Solana? What kind of made you guys think about hooking up with Serum and building it on the Solana network?
Yeah, great question. So back when we were, doing research to kind of choose our chain, Solana just stood out to me with its throughput capability. It's, very, very low cost per transaction. And if you want to be global financial infrastructure, you can't have high barriers to entry, such as like paying an exorbitant gas fee, right? And then if you go like a step further, I'm a big believer in the scaling via hardware versus software. So the way that the Solana blockchain is written, right, as hardware efficiency increases, the chain's throughput capabilities increase with it, right? And I think that that's something that's really important, because there are vastly more people around the world that work on making hardware better than just a blockchain's given foundation trying to make the software for their chain better, right? And so that was like one of the big things I paid attention to. At the time when we started like looking at Solana, there weren't a whole lot of apps out there actually. Serum was one, Radium was one, Bonfida was one. There was like a couple more, and then one of the hackathons I think kicked off right around the time when we were doing like our initial research, and some pretty awesome protocols came out of that, like Mango Markets, as well as a handful of others. And Serum, right? Serum is, in my opinion, like really beautiful because it's a fully on-chain order book. And I'm a big believer in the order book system at large. I think that if you want to bridge the gap to non-crypto natives, whether those are individuals or institutions, they're already familiar with interacting with an order book. And having something on chain will help incentivize them to be like, hey, look, this is a smaller step than it is to, maybe start going and interacting with an AMM, right? And I believe that hedge funds are going to be more willing to work with order books. Bigger institutions are going to be more willing to work with order books. So that's kind of why we settled on building on top of, Solana and Serum. There's no reason to, rebuild the wheel, right? Invent the wheel when Serum is already out there. And it's a great piece of tooling, and we love working with the team over there as well. They're a bunch of awesome people, and, really smart and continuously pushing forward.
Yeah. And I think that makes a lot of sense. I've heard a lot of things about just working with the community and ecosystem is amazing. But I think specifically for the users you guys are targeting, whether it's traditional retail users or bigger hedge funds or quant traders, those sorts of things, I think having this seamless bridge, using an order book, having something that's scalable where they're not going to worry about trying to send through a transaction and having to wait 5 minutes because it's congested, I think kind of lays out a great groundwork for what you guys are trying to build, especially just with the attention and support that Solana is getting from people in the traditional space. To circle back around a little bit to your public markets, I'm curious, how do you guys go about selecting these? It seems like you guys already have a couple. And then I'm not too keen on sort of the IPO process. How does the price discovery start on these assets? Where does the price dictate? So that was kind of like a double question there for you.
Yeah. So the way we kind of looked at like where our users are going to be today and selected, some markets that would be exciting for whether that is Kraken, because we're built on blockchain and there's a lot of crypto natives that will be using the platform originally, as well as ByteDance, because we understand that these are perpetual like contracts. So we know that China and Asia drive a lot of the volume on those fronts, and so having an organization that they are excited about trading, and then the third one being Stripe, because that's one of the biggest payments processor around the world, and a lot of people know about them, right? The protocol is designed to work with late stage organizations, right? That's the Series C, D, and beyond. Now in the future, we are going to be moving to a DAO, and so after these kind of initial markets are launched, the community will propose and then vote to initiate a new market, right? So again, aiming to be as decentralized as possible. So that allows us in our research, the research providers that we have partnered with, to do some research and write these long form reports, right? So what's really cool is there is a lot of information asymmetry in private capital markets, right? And so the protocol has gone out and made a couple of partnerships that I think are really beneficial to both retail and institutions. One of them is a group called Sacra, and these guys write sell-side equity reports, essentially, but for pre-IPO companies, right? And so all of this information will be these reports will be published to the users of the protocol for free. Just like you would be able to see, research on public companies by big banks, for example. And another group called Lagoon, which is an alternative.
Not sure if I lost Barret there.
Scrape the web for doing sentiment analysis, open interest from job roles, open to that are filled, as well as news domination and some other really cool metrics that have kind of been gated to institutional players like hedge funds only for an extremely, still I think today, I think a lot of that is gate kept. But again, that will all be free to the users of our platform to help them understand what the market outside of our platform is pricing these these companies at, right? And we do not do the protocol itself, or the team, the open source software contributors set price, right? We allow for the minters to set the price, and that is again why this information is publicly available to them. And so they are minting, creating a position, they get to set the price of those assets, right? So let's say somebody wants to mint 100 tokens, futures tokens of Stripe, for example, and they set a price of $100 a token. That would be what, 10,000 of market value out there, which means they would need to collateralize with $40,000 of collateral, right? And our system is use stable coins as collateral, not our own native token, because we understand that our token could be volatile in the early days, right? And to help prevent mass liquidations if there's a drawdown in crypto at large, right? I think the stable coins provide a added measure of safety and security to the protocol itself.
Yeah, no, I think that was a great answer. And the first question I asked about, or the second question I asked about price discovery, was just a very simple answer there, like the minters said it. So I think that makes a lot of sense. But wrapping around to some of the more interesting things, you mentioned these sell side equity reports, these reports that hedge funds are using before these companies go public to kind of give them a better idea of valuing. And I think it's unique that you guys are opening up access to this market, but you're also opening up the analytics, the data, and the resources for users to make more educated opinions on these. And I think that's incredibly unique. You guys are not only doing this allowing access to this markets, you're doing it in a decentralized manner where users are setting the minting price, users are able to select the assets, and then also going this kind of next step further and trying to provide some users with information to make a little bit more educated decisions. Another thing I just want to touch on there is I think the idea of not using your token for collateralization is a really unique move. I know a lot of protocols have kind of borrowed off of this synthetics model when doing synthetic assets. And I think it is interesting because to combat the risk, they have this crazy high collateralization ratio, but then you're not really too capital efficient. So I think that you guys are just setting this up for the stable coins, understanding the stability it provides and thinking more for the long term. I think that's definitely unique instead of kind of having this over collateralization, trying to fit in another use case for your token. I definitely want to get into some utilities of the Cypher token, but before we get too far, something I was kind of struggling with is liquidity is always important in every market, but I think especially in synthetics. And when you guys hook this up to the Serum on-chain order book, how is the liquidity utilized? To my understanding, you guys have 3 different types of LPs: people who are lending, people who are minting, and then actual market makers. To my understanding, the ease of an actual AMM or LP is that it's very easy to just throw the liquidity in there and have some sort of market making. While it may not be the most efficient, how do you guys ensure that there's going to be enough liquidity? And can you maybe just shed some light on how these LPs work if they're not quite traditional ones?
Yeah, great question. So the LPs from like a minting standpoint are very similar to, you know, any of the synthetic asset protocols out there, right? They are locking in collateral to create these positions that can then be traded on Serum's order books, right? So a little bit more straightforward. We are, you know, going out and, you know, chatting with groups that you know hold some of the underlying, or also are just, you know, bigger institutions trying to help you know place a, you know, position, whether that be, you know, long or short, into the protocol to help them, you know, make some calculated decision that they have come to, right, on, you know, which way a, you know, pre-public asset is going to move. Now, for the actual order books, right, we have gone out and made, you know, a couple of partnerships with market makers to, you know, help keep bid-ask spreads relatively narrow on these order books, right? And I think that, you know, we need an order book as well, right? Because if you want to bring price discovery forward, you need people that are coming to the system, placing, you know, bid, ask, buy, sell orders, right? To really understand what the market is willing to pay for a certain asset or sell a certain asset at, right? And that's how you bring that price discovery forward. Whereas like an AMM, right, it's all done through the mathematical curve. You place, you know, maybe if it's a Sol USDC pool and you put up, you know, $1,000 in USDC, and they're going to give you X amount of tokens based off of, you know, the supply of that pool, right? And that's not necessarily you going, hey, I'm willing to pay, you know, $210 for 100 tokens of Sol, right? And I think that that's something that is necessary for that price discovery part. And so again, yeah, we've gone out and made a couple market making partnerships for the protocol, you know, Serum based order books.
Yeah, and I think that makes a lot of sense there. And it just wraps back around to sort of building on Solana, right? And understanding that this has the infrastructure to support the market making that's needed. It also has the people sort of looking at it. I'm curious just to touch on, it seems like you guys are getting a fair bit of traction. You guys just had your funding round announced by CoinDesk, and we did a follow-up on that as well. It seems like you guys aren't having many issues at all finding sort of these institutional side of things, and now it's just a matter of getting the mainnet up and then offering these products that retail users obviously have a demand for looking at the success of FTX's products?
Yeah, I think that, we have, and I think it speaks to, what we're trying to accomplish, and really, democratizing access to a market that is kept a believer that an individual should be able to, place a financial position on anything. And so, it's a step in the right direction, in my opinion. Um, Unfortunately, we are suspending US IP addresses upon launch, but as we decentralize, we will quickly, look to see how we can, in fact, move, these products into, the US. But again, that's, a little bit down the line for what we're building. Just trying to get it out and make it as usable as possible and beneficial to, the community. I think that something that we're big fans of is not just building for, non-crypto natives, but also like crypto natives, right? So this kind of goes, you onboard new users to the space. I think, pre-public markets is a great way to get the average person excited, right? Like if I walk down the street, here in Salt Lake, right, and I ask somebody, hey, have you heard of Uniswap, or have you heard of Cipher, or have you heard of Solana, right? They probably haven't, unfortunately. But if I go, hey, have you heard of TikTok, right, or Stripe, for example, or SpaceX, right? Those are
Even Robinhood, right?
Even Robinhood,
Yeah.
right? Like those are companies that they have heard of. And I think that this protocol can get a lot of non-crypto natives excited and help really grow the pie for all of DeFi, and then offering some of the more crypto native products like pre-token offerings, right, to help bring price discovery forward for protocols IDO. I think those are like, hey, now I'm like starting to understand the space more, and they can then transition to these more crypto native products while also getting excitement from the broad crypto community as well.
Yeah, and I think that's incredibly important. While we're here, what is sort of like, this is always just a good general question. What are the strategies there to onboard these basic users? Users maybe that are familiar with Robinhood, as that's just like the easiest one. How do you guys look to onboard these non-crypto native users? Because it can be a little bit clunky at the current point in time.
Yeah, great question. So I think that there are like a couple of ways to do that. I think some of the protocols on Solana have done a good job of writing, documentation and like walkthroughs of like, hey, if you have never had a wallet before, this is how you onboard to create a wallet and fund a wallet, right? I think that, there are other organizations. I mean, like FTX with FTX Pay has done, some good work, and now there's a handful of wallets in Solana that utilize FTX Pay. I know MoonPay is doing a lot of work of being like this beautiful on ramp for turning fiat into crypto. And so I think in the long run, we'll also like work to set up how can we integrate with MoonPay to make that onboarding process even easier. And then there's some other more institutional based products for like on-ramping lots of liquidity for like a hedge fund, for example, that we will in the future again also integrate with to help them move mass amounts of fiat into crypto for the purpose of populating their margin accounts that we allow for the spinning up on our protocol, right?
Yeah, that makes a lot of sense there. And it's just important to be thinking about those things. And it definitely sounds like you guys are exploring the pathways there. And that's really what it comes down to. Just even on like the multi-chain landscape, it never should be a fight for crypto native users. Like there's already so little of us in proportion. It's always going to be, okay, how as a whole can we bring crypto more mass adoption? So I think that's always a fun question there. Something kind of along those similar lines is, I think just from the label itself, like pegged or synthetic assets, it might scare away a lot of beginner users. In your mind, what are like the biggest risks and challenges of synthetic and pegged assets, and what are the solutions to those, or how do you guys aim to solve them?
Great question. I think that, in reality, it's not that big of a deal. If you look at like the average person that owns a stock, they're not like, a lot of them don't participate in like the voting that like a corporation even gives them, right? And so to them, right, they're just holding some asset for its purpose of like accruing value, or maybe they took a short position, right, because they believe it'll go down, right? And that can be, that financial exposure can be created through synthetic assets. I think there's education to help them understand that, hey, like, look, like at the end of the day, that these markets are financially settling to the pre-IPO financially settled to the last, tick price essentially on IPO day. So there's always some peg to the traditional world. While in the intermediate term, while these markets are tradable, there isn't like a peg, right? We're allowing that market to be like, hey, we're willing to buy and sell, because over the next 5 years, right, I see crypto exploding, right, and becoming very widely adopted across all countries. And if you have enough people trading, right, you can actually provide organizations with data points that they have never had before, right? So like the IPO process today, big companies go to banks, right, and underwrite their IPO. They go on road shows to make sure that it is oversubscribed, et cetera, right? And they do a pretty poor job of actually bringing price forward. If you look at Airbnb, for example, which IPO'd last December, they IPO'd to the banks at $68 a share. And then by the time retail and even some other institutions were able to buy in when it hit the open market, it was already at $140 a share, right? Given the amount of shares that Airbnb issued in their IPO, they left $3.7 billion on the table, which is over 100% of the amount of capital that they raised in their IPO when they sold their shares to banks, right? So they left a significant amount of capital on the table. In, I think, like on average, there's $132 million of value that's left on the table by any amount of company, or like any of the companies that are going through the IPO process. And it's even more with these bigger, more well-known organizations, right? And so they could look towards to be like, hey, look, there are millions of people here. There are institutions. There's a lot of volume giving us this giving us this valuation. So this is something that we should shoot for in our IPO, right? Allowing them to capture a lot more of that value. Also being more fair to the retail community, right? Because they now have that ability to gain that financial exposure before they have that big pop on IPO day.
No, that makes a lot of sense. And even to just circle back, I think your point that it's almost just like a misnomer that people are scared of these synthetic assets. Like it's just the title itself. When you're right, when you look at people on Robinhood, they're not using any of their voting share powers, let alone, like, to my understanding, Robinhood, like, you don't even completely have the custody. So it's not like these users are very nitpicky on specifically how all of these things work. I think what just matters is that they do work, they're collateralized, and they have a peg they're settling back towards. And like you said, I think it just comes down to education, that it is bridging a massive gap. And even just in the sense of like tokens or companies that are IPOing and IDOing, I never thought about it in the sense of how much they're leaving on the table. But it makes sense, especially when you start to see some of these more like quote unquote fair launch tokens where everyone is just able to pile in and then it just distributes that capital. It seems like more of an efficient system versus kind of like the early people getting to take everything and then retail getting screwed over, and then also the company or the protocol leaving a bunch of value on the table. So I think that makes a bunch of sense overall. To keep kind of moving forward here, I know we lightly touched on the Cypher token, your guys' native governance token. Do you want to maybe touch on what that's used for? I imagine that's kind of where the voting mechanisms and all of this come into place.
Yeah, absolutely. So obviously one of the big utilities of the token is going to be for voting and proposing new markets to initiate, right? Whether, that is a pre-IPO company, a pre-token protocol, right? We're working to roll out, other markets in the future, such as like rarity tranched NFT futures to allow people to trade or hedge exposure across an entire NFT collection. We're looking at, like DeFi rates and how to design, futures, expiatory futures around, hedging for rates, and then some other like traditional style products like inflation derivatives, which are pretty important, especially now as we watch a lot of governments spend a lot of money and kind of see, record inflation on some of those, assets. We're also looking at, state derivatives. We want to have, again, this healthy mix of both crypto and non-crypto native products for people to trade.
Yeah, that makes
sense. That
go ahead,
other utility, right? Very similar to like Serum and FTX with FTT, right? We will roll out like a tiered staking mechanism where if you hold, a certain amount of the tokens, you'll get a certain amount of reduced fees from trading on the protocol, right? And then we will, continuously roll out more utility for the token in the long term, right? Stakers will also be able to earn rewards from the protocol, being able to, if you're staking again, not only can you get fee reduction, but you could also participate in rewards that the fees that the protocol is generating, right? And distributing those back to the community as well. And I think that there's like a number of ways to go, and we're always looking for, community input and making sure that, the community is really a big driver in the utility of the token. And so, I think that that's something that's really exciting for what we're doing. But those are kind of like the three big pieces so far for the utility of the token: that fee reduction, the voting and initializing markets, in the longer term, that rewards from part of the fees that the protocol generates, right?
Definitely. And I always think it's most interesting getting into the governance topic. There's always this balance, and I'm sure this is something you guys think about a lot, and I'm not sure if it gets brought up too far across DeFi. What is this sort of stance of when is it time to, in a sense, completely turn over this protocol to the community? There's obviously a lot of building that needs to be done, and it's not like you can expect the community to kind of prop up a series of smart contracts to make this happen. What is the end goal for kind of the decentralization here? Is like the end goal vision where it's completely turned over to Cypher token holders, and then if you wanted to continue to have a say, you just have a portion of these and you'd be able to make decisions, but the ultimate goal is that it is community based once it can stand on its own?
Yeah, absolutely. The ultimate goal is to be truly decentralized and have the Cypher token holders be the drivers of, the protocol going forward, right? We would love to, have people build their own UIs for, the protocol, right? Like at the end of the day, the smart contract is smart contract and our UI will be open source to everybody, so people can build UI on top of our protocol, and maybe they want to design it differently or change a couple of things that we have done on the UI perspective. We love that for allowing anybody to be a driver in moving this forward. I think that that's like kind of like the whole DeFi ethos, right? And something, one of our slogans is, trade the untradeable or let the people trade, right? And so I think it's very appropriate to, let the community, do and be the real drivers of the protocol, right?
100%. Yeah, I agree. I always just think it's fun to bring that up because we are in a space, like in the current landscape we're in, it's a lot of building. So it makes sense that there's still projects leading a lot of the way, but it's nice to kind of know and understand what the end outcome is of these projects. And it seems like that's what the consensus is among most people. But it's maybe not like talked about enough when this transition is going to happen. And this sort of segues into some of my final questions here. So if anyone wants to drop anything in chat, go ahead and do that, and I'll see if I can't relay it over to Barret. But this kind of directly fosters into building a community. And I think specifically for something like trading products, it's definitely a bit harder to build a community as opposed to something like NFTs. People, there's so much buzz and love building a community. How do you guys plan to kind of set up the community for success? Are there things you guys are thinking about? I know that's definitely an important thing in our decentralized environment.
Yeah, great question. I did miss, I feel like, quite a bit of what was said prior to how we're setting up the community. But if that's like the question, I can
the
I can
main
rip on
gist
that.
is
I
just
just
like,
wanted to make sure I
main
didn't
question
miss anything.
is community is important. And you guys are, personally, in my opinion, in a harder position as per se, like a NFT project. So how are you guys looking to kind of create this community?
Yeah, great question. I think it goes a long way to just always have like open communication with the community and getting their input and feedback and really working to incorporate everything that we can from the community. I think education goes a long way. Whether that is, on what synthetic assets are or how the protocol works, or hey, like these are, this is kind of how some of the community members have thought about proposing a new company or protocol or asset to be traded and why, and just making sure that there is enough buy-in to continue to incentivize the community to want to participate in the DAO when we do fully decentralize, right? And I think that there's a number of ways you can do that. I definitely think that some of these markets are really exciting, and so I think that we will have a lot of buy-in from the community, especially as crypto and DeFi grows. The amount of protocols on Solana are growing, and being able to help protocols have fair launches. You can have a lot of buy-in from protocols to help you design markets for them, right? To bring that price discovery forward. And right now we're all cash settled. Something we do want to get to in 2022 is being able to do physical delivery for protocols in regards to like their pre-token markets, right? So they can actually raise an IDO essentially through the mechanisms that are designed, right? And then just integrating more and more with other protocols in the community, in the Solana ecosystem, right? I think that goes a long way to help incentivize the community to continue to participate, right? I think that as contributors to the protocol, we have to show that we are very much excited and committed to what we're building and continue to roll out new features and et cetera. And that continues to keep the community excited and wanting them to participate as well, right?
Yeah, I 100% agree there. I also think that's really interesting what you threw out there, potentially having these pre-public markets physically settled. I think that is a really unique spin there, and is a great way of sort of a unique twist on raising funds and kind of involving everybody in that. I'm down to the wire here, so I'm not sure if there's anything else. I know you touched on your roadmap a little bit, if there's anything else you want to elaborate on there, but I really just like overall the idea that Cypher is looking to build. It seems like you guys have the infrastructure you're looking for, are building something unique, have already picked up a fair amount of backing. So it seems like you guys really have the momentum going. It seems the ball is really just starting to roll. So lots of exciting things. I don't know if there's anything you want to kind of close up here with, Barret, before I send you off and then just do my little wrap up here at the end.
Yeah, of course. I think that, some of the things that I would like to mention, is definitely stay, pay attention to the Twitter. Pretty exciting announcements coming out in the relatively short term in regards to a number of things such as markets, new products that we're working on, as well as when we're going to go live. Obviously DevNet first, and then mainnet. But I think that there's some really exciting news coming up here in the short term in relations to that stuff. I think one thing that I also will mention is we're a big fan of eating our own dog food, right? So one of the cool things about what we're doing is aiming to bring that price discovery forward. And the first pre-token market we're going to launch is actually for the native Cypher token. And then we're going to allow that to let the community in and trade before the protocol does an IDO. And so that's going to be pretty exciting. I'm super that, and just to show like, hey, like this mechanism can work, and I think it'll become a very popular way to bring that ideal price discovery forward, because it's more natural to have like a futures market than kind of just setting your price as a protocol for your IDO, or doing maybe like the batch auctions that we've seen become like relatively popular on Solana. And we also have been chatting with a number of protocols to launch pre-token markets for them as well. So some big things are coming, and super excited to trickle out information over the weeks and months.
Yeah, definitely. Thanks so much for that, Barret. We will definitely be keeping a close eye on what's going on Cypher here for any of our users. Definitely looking out for that pre-public market for your guys' token, and then anything else coming in Q1 of next year. Other than that, I just want to thank you a ton, Barret, for coming on. I'm sure we'll chat sometime soon, and I'm just going to wrap this up here for our viewers at Solana and News and DeFi Direct.
Awesome, Greg. I had an amazing time. Thanks for letting me come on and chat with you and the community that's listening. Thanks, man. Really appreciate it.
Yeah, definitely. No worries. Until next time, Barret. Awesome. So that was great. Barret joined us from Cypher Protocol, and it was amazing for him to touch on the real use of pre-public markets, both for IPOs and IDOs. What I really liked is just the fact that they are focused on education, trying to get all the most information they can to their users and trying to level the playing field. I think there are some really interesting points about the fact that synthetic assets aren't really as scary as they seem, things about how much value is actually left on the table for IDOs and IPOs. So I think overall, there's a ton to look out for Cypher. We'll definitely be trying to keep our ear close to the ground, looking out for these developments, any updates on that end. For everyone viewing here, please go ahead and subscribe to the channel, hit the notification icon, even like this video so we can know if we want to get Barret back on. We've been doing tons of content, just pumping out streams. There's tons of interviews on Solana-based projects, BSC-based projects, Ethereum-based projects. So we're really just looking to be a hub for all of DeFi. Other than that, guys, I hope you appreciated the stream. Go check out Cypher because they're doing some pretty exciting things, and I will catch you guys next time.